Hey, welcome back everybody. We are live. True scalping time, and we're back. I'm back after we had a nice Easter break, and we've had a couple of really good weeks scalping with our new setup using the MFS indicators, and also now trading the 2-minute and the 5-minute time frames simultaneously. So it's been a real good profitable last couple of weeks. So obviously I wanted to share what's been going on, and obviously everyone who's part of my team is now got access to all this setup as well, and all the help. And if you want to know more about it, and obviously go to the website www.mohawkforex.com. So coming up in 10 minutes we have one of our favourite news events, the housing starts, building permits news, followed by the open, and then we'll see how the market reacts to that. We're on the US-500, SP500 indices, which we've been doing really well on. In fact, last week it was 90% win rate, so really happy since I switched from US-30 to the US-500. I'm on IC markets, but it's been performing really well. And I can see I've got a 5-minute chart here with our baseline, our automatic trend lines, our support and resistance as well, all built in, and our famous RSI algorithm, which has been especially made for us to keep us on the right side of the trade. So looking at the 5 minutes here, we've got a nice spread away from our baseline, and so we're looking potentially here for sells depending on the news. This is looking really good. This kind of resistance is holding up. Switch to the 2-minute time frame. It's the same story, as you can see, and then we combine the two charts together, and this is what we get. And we've got a nice supply and demand zones in here as well, as you can see. And these are all our major and minor support zones, which again, it's all automatic, all built into the system. You haven't got to worry about drawing anything. All you've got to do is wait for the setup, take the trade, get in and out. Don't overstay your welcome. It's kind of an insight into what we do and what you get when you join the group. There's all these indicators, all the best of the best, and you only need to have 2 indicators, which you get 3 for free on TradingView. The only addition we've got here is a couple of simple moving averages, a 200 and a 20 on the 2-minute time frame, just to try and simplify things, so we know where price action is on the 2-minute compared to the 5-minute, and because the 2-minute is the trigger for my trades with news events and opens. I literally will follow the trade depending on where it is against the moving averages. And then for the bigger moves, we will look at the 5-minute time frame. As you can see, price is just trying to break the resistance here. Look, it's getting up here on the 2-minute as well. So we're above both moving averages at the moment, so we're kind of bullish, we know. But again, as you all know, dead easy trading as the moving averages come further apart, 20 and the 200. The bigger the part, the less likely you want to get in on a buy, and we're looking to take some kind of dip from this and see if we get back into this zone here, which is what we're trying to get down, and see then if we take sells if it goes below this and breaks the 200, and buys if it bounces out of this zone. So pretty straightforward, nice and easy, uncomplicated. The RSI on the 5-minute just tells me, you know, if we're above the average line or below, or if we're looking to take buys or sells. We've got a couple of overbought zones, which again we look at. We've got a continuation zone at 75 and 15, and we've got the overbought zones at kind of 85 and 15. So we will see. So we're just going to do US-500. We're going to trade it for this news event, and then stick with it, and then see how this goes on the open as well. There we go. And the open is, where are we? Just put a marker on there. So as you can see, we've got a nice zone of resistance on both. We've got a nice trend line that's been drawn. So again, if we can get a break on this trend line, we're coming down to our baseline on the 5 minutes, possibly down to our next support zone. Big drop, or we're going to get a bounce and a continuation up, and we've got some heavy resistance above here at 4173. So perfect setup, everything's there. Nothing to trade at the moment. We've literally got 5 minutes till the news event. Here we go, as a countdown. We don't know which way it's going to go. The figures are anticipated to be a minus on the homes and buildings on the month. So lower, which means the economy is tightening. This means the higher interest rates are working, which means inflation is coming down, which means if it is a minus figure, then we're looking at positivity on the market. So we could get some tasty buys before we have a pullback. We will see. We will see. Like I said, we're going to stick with our 2 minute combined together, but if you've got extra screens like I have, you can have the 2 and 5 enlarged, so you can see the bigger picture if you want to just trade one of the time frames. But I like to have this combination when I'm trading opens and news. Okay, Bloomberg. Let's see what Bloomberg's saying as well.
This is where it's been going for a while. Live sport and news, and then everything else. They've been throwing money at content.
We'll see what
clearly they're going to have to be a lot more disciplined than they used to. The discipline's got to extend to a whole bunch of things. Did you see Lululemon yesterday? Do you remember they bought that mirror thing?
Yeah.
How much was
that? I don't remember how much that was. No, they sold that. They sold it after buying it earlier. Yeah, because they got.
So we've got 3 minutes just watching the countdown.
As lucrative.
Back in the day, zero rage, could throw money at a wall and see what sticks. Buy a mirror
and stick it on your wall.
Coming up, the Open, Jim Kerr and more.
Going to move our chart across, so we'll see how this news event is going to impact, and then we'll get the reaction on the open as well. So 3 minutes to go. We're logged into our broker. We're trading 0.8 on US-500, which is basically 80 cents a pip. A margin level of only $134, $150, so you don't need a massive account to trade this. So let's see what we can get. We've already had a good morning already. We're already more than halfway to our daily goal. It's been a really good, successful morning trade in DAX. We're switching between DAX for the London session and the 500 for the US session. Then we'll do a bit of gold every now and then. We'll do a bit of cable. But mostly I'm trying to stick now to just DAX and the 500 because they are giving me consistent results. So and if you find something that gets you consistent, yeah, you better stick with it. So 1 minute to go. Good luck everybody if you're going to trade this. Like I say, if it drops big time or goes up big time and you miss that initial push, don't panic. You can just get ready to jump in on the next move on either the continuation candle or the pullback. So see if we get a nice gap on this 2 minute. We've got 40 seconds to go. We don't really particularly need to see the result, because the market will move. Right, we're going to get in there, get ready. 20 seconds. By seeing the candles, we will know which way the news event is. That's why you don't have to look at the news event. You're too late. We'll just wait for the move, and then we'll know whether it's better or worse than expected. As simple as, and avoid some manipulation. So let's see. We're hovering over our buy and sell. 1 second to go. There's the news. Release. Let's watch that. Waiting for it to come out. Get ready to see if it gaps up or gaps down.
Where green buildings and green business transform the livability of communities.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts. via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com webinars.
Let's see. See if it's going to push up, break that level of resistance.
Meanwhile, back at the ranch, we're looking at 7% mortgages, maybe just a little bit below that, and it folds into a wall of housing data today. Lisa Bramwitz and Tom Keene here, Bloomberg Surveillance on radio, on television, and we're going to get here, you know, we get the New York Fed services business activity. Maybe that's tertiary, but housing data is not tertiary. It's important to all of you. Michael McKee has our complete and total report. Mike?
Complete and total. It looks
Here's
like
the news.
we've come in a little bit better than expected, but certainly worse than last month. In March, housing starts down 0.8% to a 1,420,000 annual rate. The building permits number falls 8.8%. That is worse than anticipated to a 1,400,000.
So let's see if we pick up some buys on this.
Prior months, 9.8% for starts and 13.8%, well, 15.8%.
There's actual news result.
Building permits. So,
Let's wait. Didn't shoot up, which is good, nice and steady.
Of course, on a month-to-month basis, these numbers are very lumpy, whether this is going to be a trend or not, because the numbers were so strong in February. Housing completions were up, were down 0.6%. That's kind of one to watch, because that's what.
Let's see if this is now going to hold up as a support zone. It's going to push up.
Starts to fall.
Just waiting to see, and then we'll load in some buys.
For 6 months, so the completion isn't there yet. How does it fold into GDP? Are these numbers like PR numbers by the building industry, or do they actually fold into those numbers we focus on?
They've helped fold into both business spending and residential investment. So yes, they fold.
Going to break that higher high. Look, it's very nice.
Direct line as the other things that we do, but it is a certainly measure of the influence of the Federal Reserve with mortgage rates.
We're done. Closed our positions there, and we managed to get $40. There you go, $40 on that move. Just took it before it wicks down. I'm just going to post those results so everyone can see I'm telling the truth here. There were the buys.
Business activity being tertiary. However, what we saw from the Empire Manufacturing yesterday was much stronger than expected, which is an early read on what's going on there. This coming
So
in
now wait
than the month before.
for a pullback.
Negative 9.8. I don't know, Tom. What is?
All right, let's get ready for a pullback.
Fortiori.
Let's watch that chart again, because we look how far away the moving averages are. So we're going to load in some sales on this full candle and let that wick out and drop down. Let's just see how many we can get executed. Right, let's sit tight. Let's sit tight. Ooh, let's sit tight. We've got a nice blue zone form there, as you can see.
There is a softening in the U.S. economy. What that means
2 minute.
The reaction function of the Fed from all these speakers. Kathy Bastianchik of Nationwide saying that yes, there is going to be potentially a moderate recession in the second half of this year, but she wrote, quote, inflation at the core level will not allow the Fed to.
Like I said, we've got heavy resistance, so we can load some more cells in. If price gets up here, if we go into any kind of drawdown, we're just waiting to see this. If this red candle comes in, engulfs the previous green.
This is not being priced into the market, Tom. What you are seeing in the market still are rate cuts through the remainder of this year.
Kathy Bastianchik joins us now from Nationwide, really definitive on parsing GDP out and what it means for the nation.
Just going to sit tight. Slow moving today, but that's good. And we'll get a reaction on the open, of course, as well.
Well, it is part of the leading economic indicators. So if you think about the Conference Board's overall index, it's one of the subcomponents. However, that one seems to stand out from other leading economic.
It's a nice little break, nice little move down.
Resilient, or maybe more resilient than even the labor market.
And we'll end that one there. Yeah, another $40. Another $40 on the reverse way back. I know it's going to wick up. It could go down some more, but we'll wait and see. But I just again post those results. So we cleared $80 there in 5 minutes. since the news event. That's nice and sweet, and that's what you've got to do, is just not be greedy, try and be risk adverse, don't be crazy. These news events just pop, and then you get the reversal, and then that's what you've got to do, is then could a hold. Look, it came down a bit more. It's about to hit this support. Is it going to break the support? Is it going to hold? I'm going to be sat on this and I bounce back up. It's gapped a little bit. Is it going to come back and touch our moving average? This is what it's all about now. Like I say, because we've got a big gap.
I think the key though is the labor market, and if you look at the conference boards measure where
so with two blocks of sells, you could pop some more in now, because I think this is going to come down again.
Sentiment index is influenced more by the equity market, and I would say even gasoline prices.
That's a nice little move, nice little news event. Just going to post that.
I would say overall the consumer's feeling very conservative at this point. You know, a lot of the pent-up savings they had have been expended. They've been able to splurge a bit on the service side of things, but now have to kind of recalibrate, especially if we're right and that cracks start to develop in the labor market.
These are my kind of favourite trades, is where you get a nice little pop, jump in halfway on the candle when you see it moving, and then just wait for the pullback, and then that's it, done, job done. Don't take any more risk. Smash some trades in, get it done, don't need to be hanging around. You can see now, look, it's come down, and then we've had a rejection off our zone here, so we could be coming back up again, or this could range now until the open, then we'll get another reaction again. But like I say, for me, I want to be looking for more sells and buys, because our 20 and 200 are way apart, and you know, this zone here didn't hold, rejected, broke through. This zone has now been retested 1, 2, and then broke, and now we've got another one. So it's been climbing, it has been climbing, but we're due a correction. Maybe down to this level here. If you were shorting from here, my stop loss would be there, and my take profit would be just about here. Look. So this is the kind of, if you're into holding trades, this is where you might be sat right now, or you might want to wait until prices broke that 20. But fairly easy to follow, whether you want to set and forget kind of scenario, or you want to live scalp, true scalp as we do, in and out. We don't set a stop loss, but we've got a stop loss. I don't like to usually lose more than one candle. So for instance, if this red candle had gone higher, I would have ended the trade, waited for it to come back, etc. So that was a nice little green look. We should have gone in again on a sell, so now I'm going to pop back down.
You do have stickier inflation. You have a Fed holding rates around 5% for a long time.
Again, just don't know if this zone's going to hold or not, so I'm just watching it. So look on the bigger screen, you can see.
And that's worth just noting that, you know, typically the Federal
That's the
Reserve
Homes
is lowering
News.
raising rates and fasting cutting rates when we go into recession. So we're seeing really the
Like I say, because it was minus,
in this business cycle.
negative, obviously the market pushed up on that negative news, because that's better. Like I say, it means the economy is tightening, as you can see there. 0.8, but not as low as what was expected, but still a minus figure compared to last month, which was 7%. Revised housing starts and permits both down, and then the building permits month on month way down. So you can see why the market's popped up, because even though data wise this is bad news, because statistically the figures are lower, and this is where traders get caught out. They assume, oh, it's green, oh, I'm going to buy, oh, it's red, I'm going to sell. I wish it was that easy. It's not. You've got to interpret the data before you take the trade. You've got to understand what you're trading, not just blindly on news events. This is where traders get caught. So on this occasion, like I say, a worse than expected result is better for the market. And even though this was the opposite, it was still lower than the previous month. So you've got to analyze all that and go, okay, why did the market pop? That's why this went up. And then we're just looking at price action. What goes up must come down at some point. So it could have been 3 or 4 candles later. It could have been, with this news event, I know it only lasts 1 or 2 candles usually. So 1 candle and then it's popped back. That's it, in and out. And if you can do this every single day when there's high impact news, and understand the best news events to trade, you will be a profitable trader. But most importantly, you'll be quick as well. You're not exposing yourself to holding trades for long periods of time, and that's the art of true scalping. That's what I try and teach. Okay, you can see on the bigger 2-minute time frame, that's what we had, and we're looking for, you know, we want, if we, you know, sells below the 20, here's the 200, and we're going to see these cross. I mean, it's a very, very bullish pullback at the moment on the 500. And again, if you look here where this candle broke and you think I might take a sell here, all you got to do is look down at the RSI and go, no, your RSI is not red, so therefore that's a fake out. You know, and again, didn't break out the zone. This is the only one where I would have taken a sell, or I would have caught that, and as soon as I see the next candle go green, I'm out. So I'll just scalp that, and then scalp this one here. That one you want to take in, because again, the RSI is telling you stay bullish. And again, this little pullback, I know again, RSI is still green, therefore it's just a quick pullback, get in, get out. Once you get to learn the technique, it's good. It's good. You've just got to practice, as with everything, and learn to see and anticipate.
How do you understand what kind of downturn there will be if it's more in sight and people keep spending? And then if the Fed keeps
so well done. We took 10 trades and 10 winners. A nice little $80. And just in 5 minutes. And that's what it's all about. If you're more risk averse and less risk averse, obviously you can increase your lot size if that's what you want to do, depending on your account size. Me, I just like to stick with my same lot sizes no matter what account I'm using. I've got a couple of small accounts, a couple of bigger accounts, but I use the same lot size. I just don't increase. I just add multiple trades. That's the way I do it. I just prefer to have multiple positions open.
SPX 4196.50, right up against 4200. Stay with us on radio, on television. This is Bloomberg. Good morning.
So now we're going to wait for the open and see how that plays out, and if this news impacts or not. Like I said, there was no massive big spike up like NFP or PPI or CPI like there can be, or retail sales. And I like those ones, the ones where you don't get the big massive spikes, because you can get scared and you don't know whether you need to join on the candle, which you should do, when the pullback's going to be. So I do like these ones where the news event just does a little push, you get your money, you get the retracement, and then you move on. Like I say, we could be seeing another little bounce here, but we've got heavy resistance, and this is basically like a 4-hour resistance zone that's coming up. So if price gets up here, guess what? I'm loading some sells in, because we're due a correction. So here's the main chart we'll stick on. Like I say, we've got the 4-hour resistance zone there. We've got a trend line break, we've got a baseline.
Taiwan had previously purchased ship-launched versions of the Harpoon, which is made by Boeing. The contract with Boeing was issued on Taiwan's behalf by the U.S. Naval Air Systems Command. The United Nations making
We'll actually top our coffee up as well whilst we are waiting. We might get a move in 15 minutes, because usually half an hour before the open, little pre-market trade. A lot of traders jump in pre-market, so that could be one to look out for as well.
Jumpstart the economy. Without it, per capita income could fall to $306 next year compared to $512 in 2020, making Afghanistan one of the world's poorest countries in the world. Global news powered by more than 2,700 journalists and analysts. I'm Lisa Mateo, and this is Bloomberg.
And once the open's done, we're done for the day, because we had a good session. We scalped for about an hour on DAX this morning. We took about 30-40 positions, which is really good. And you know, we've got near our daily target. We're not far off now. In fact, I'm only $10 away from my daily goal, so I just need to trade the open and then we're done. And that's what you got to do, is set yourself a daily goal percentage wise. Depending on your account, it's not all about the amount of money you make, it's the percentage of return. And once you've hit it, close your laptop and trade again the next day. No need to overtrade, because, and I've done this, I've ended up winning and then giving it all back by the end of the session just by being greedy, thinking you're Jack the Lad, thinking everything's going to keep going your way, and then you have that one trade that goes against you. You try and hold it because you think it's going to come back, and then you don't end it, and guess what, you give all your profit back. So yeah, I keep telling all my students again, just the same thing, just get in, get out, take some green, whatever it is, doesn't matter, you're winning, and then go back again the next day. And if you're winning every day consistently, even if it's $10 a day, you're in the top 10% of retail traders. So be consistent at something, whether it's $10 a day, $50 a day, $100 a day. Try and be consistent in that kind of consistently green, and that will, then you have the confidence to increase your lot sizes, up to the level you're comfortable with. And then once you get to a certain level like me, I don't increase my size. I've been trading 8 on SP 500 for the past 2 months now, and on DAX I trade 2, so that's 0.2 most people, and that's it. I don't increase. I'd rather do multiple positions so I've got enough leverage and margin to get myself out of a hole, dollar cost average it down if I need to, so I end up breaking even. Whereas if you're lumping it all into one trade, I keep saying this, one big Lambo trade, and it goes great for you, perfect, you're only paying one lot of commission and you've won and blah blah blah, gone buy your Lamborghini. But if it goes against you, how strong can you hold? When you see them figures go from 3 figures to 4 figures and a drawdown, it's easy on demo, but when it's your real money, can you see that and hold it, and or do you just end it quickly and then it goes your way? Well, I'd rather see split multiple trades, smaller lot sizes, small amounts of money. So when it's all red, I'm down a few dollars on each trade, not one big. It's a psychological thing. It's easier to say, okay, I'll hold this and I've got a chance of it coming back here. I can see my next level. I'll average it down. But if I've got 2 trades that are fully maxed out, one, I can't take any more trades until I've ended these on a loss, or you're praying it comes back, which it never does. And also just that fear factor of seeing yourself down that much in a drawdown. Even the trade is going your way, but you go into drawdown, and that's what scares traders. And they end the trade, oh god, I can't afford to lose this, before it's actually hit their stop loss. So just from my point of view, I just don't go any higher than what I'm trading, and I can deal with 5 or 6 trades being in the red against me, because I don't know, just something about looking at smaller, just being broke down. Whereas one big trade that's losing you $1,000, whatever, it's so tempting to say, oh my god, I've got to end this, Anyway, that's my theory. It's a psychological.
I think it's really the cost side with Goldman. So they did miss on fixed income trading, but they did better on equities and they did better on fees. So I would say net, the investment bank came in line. Granted, the other people had positive surprises, but Goldman is coming off some tougher comparisons.
Did they need to lay off a lot of people?
The head count does look like it came in a bit lower than expected, and I think they are making those cuts. A lot of the cuts we saw relate to Marcus. That also contributed to some noise in the quarter. They took a loss on some of those loans. They had some provision kind of come back into earnings related to that.
The Apollos of the world aren't the only ones looking for opportunities, and I wonder about how much in the numbers that we're seeing is some of the big U.S. banks taking business from Credit Suisse, from other potential firms that might be kind of in a weaker position. How do you parse that out in some of these results?
I think that's a great point, because I think that is exactly why we saw this huge quarter. Bank of America fixed income, huge in the sense that they had sizable growth. I think it was up almost 30%. And if you think about the businesses that Credit Suisse really excelled in, so securitization, spread trading, all those types of businesses coming in really strong at Bank of America. Granted, they have easier comparisons, but I think that there is definitely some share gains going on there.
Do we have a sense of who the likely winners will be as this whole process evolves of credit tightening and potential distress at specific firms? I mean, is it going to be JP Morgan, Bank of America, and Citigroup? Is that what we've learned over the past couple trading days?
I think what, in terms of the deposits, we did see Bank of America, Wells Fargo, and JP Morgan all benefiting from that flight to quality. So only JP Morgan showed a net increase over the quarter, but we saw in some of the detail in Bank of America's numbers that those last couple of weeks they are gaining share. And that really, I think, goes to the very longer term story. The U.S. banks have gained share in retail deposits, the big are still getting bigger, and in trading.
Well, so this is the issue that I was grappling with. Back, I don't know, 15 years ago, people were talking about too big to fail and banks getting too big. And now
watching that 20 moving average look price, getting back to it. Are we going to see a break? Do we take a retest? Zoom in on it, look, you can see.
Well, I think that's a great point, and I would add to it.
Got 25 seconds left on this candle. You can see it's rejected off it nicely, but look at this gap between the 20 and the 200. This is what I'm interested in, and taking profits on this level here.
Did not succeed. And I think if we look at the last crisis, right, it was sort of
that's kind of the zone I'm looking at.
Like Lehman and Bear that failed, whereas companies like JP Morgan survived. Granted, we did have some government help in a lot of the other businesses, but I think that the retail, the mix really helped out. Secondly, what's coming out of this is really that we need more regulation on
if obviously we get a break.
Right? And so some of the size of, some regional banks that are sizable enough that they can have some of the issued debt and have some of the protections that have been put in place for the bigger banks.
Bank of America has an operating income, I'm going to say $32 billion. Some of the regionals I look at have $2, $3, $4 billion. These guys are teensweens compared to these majors.
Breaking nicely, look, breaking nicely on that 20. We're going to come down to our trend line.
They can. I mean, keep in mind.
RSI on the 5-minute dipping down. Let's just see. So you've got an indecision candle here.
This is it. This is what they've been waiting for, right?
I think we have. I mean, Truist was one of the banks that was created, right, created just for this respect. They wanted
I like how this moves really nice out of the zone, bang.
These bigger banks, and I think the jury's still
extend that across to there, look, and all the way back to our zone here, look. That's right slap bang there, boom. So it's kind of our zone. There we go. It's more like it.
Checks written going down and Zell going up like a moonshot. How do they compete against that?
I think it is about having the best cutting edge technology, right? And so just because you spend more doesn't mean you're the best. It has proven to be an advantage, obviously.
Got bank earnings, remember, still as well affecting everything.
A little bit more of an edge, but there have been other companies, other upstarts, right? The disruptors are generally not.
See there, we're still waiting for this to break.
We've had competitors in other parts of the business, such as
yeah, rejected off the 200 look. Could have gone in for a cheeky bar on that, but I'm not fan. Like I say, I've had my fun here. Could have had another little rejection there. I'm really waiting for a break.
Technology, right? That's called doing an EF Hutton. That's what we call that from a few years back.
Okay, duly noted. There's this issue as we look forward to the earnings from Western Alliance and other regionals going forward about whether the business model makes sense and whether
trying
it's
to break.
Right, because you talked about more regulation.
Got 5 minutes to that half an hour pre-market where a lot of traders like to jump in. So like I say, we've just got supply and demand on here, support and resistance, and a couple of moving averages on the 2 minute, and then we've got our full setup with the RSI on the 5 minute. Nice and simple, not overcomplicated. That's what we want.
Some kind of liquidity ratio that is more punitive to uninsured
This is looking good.
There's also been talk about raising the insurance deposit limit. I think that is something that has to be coordinated globally.
Got a support zone here, you see on the 5. That's why I'm not jumping in.
Deposits moving one way or the other, but the three big banks have made it a point to say, look, this was something temporary. It's over.
There you go. Looks rejecting again. You can see it pulls back.
Businesses with imbalances, you need to figure out a way.
Not convinced on this one yet.
Or you can become
RSI's come back out the zone as well. If it goes back into that neutral zone, there's a chance of a break. But again, for what you gain in terms of pips at the moment, because I just don't know how high it's going to go before it's going to drop. I want to see a break above the resistance zone here to be jumping in, and then a trade up till the next heavy resistance.
We will see a price to book expansion among these banks, that they will recover on a price to book basis.
Well, I would say in the near term, and again, just to remind, we don't do buy, sell, hold, but we can sort of talk about things that drive the stocks.
Yeah.
And I do think the returns are impressive, but it is very hard for banks to outperform going into a recession. But the positive thing is, as we come out of it, the fact that we could look at JP Morgan, 23% return on tangible common, probably going to beat their target this year, probably going to beat it next year. That bodes well for structural valuation.
Allison, thank you. Allison Williams, Bloomberg Intelligence here, really with just terrific banking experience. This was a great banking day. I actually learned a lot.
This is actually
what's going on.
Agreed. I do think that as some of this bleeds forward, the banking system will change dramatically in 2023. I think that that's the takeaway, is that you're going to see that greater consolidation. Excellent question around regional banks and their role.
Nice rejection. We've got 1 minute 15. That's looking better.
And what they have to do in terms of regulation and just, survival of the fittest, and also just them making the biggest profits.
And that goes away from the Fed ballet and the interest rate guesstimates over to business strategy. And I think that's where Jim Zeltner was with Apollo, is saying a lot of people have to figure out a new business strategy given where rates are right now.
And they're going to be there for that. Of course, at what point do we
nice
see
push down, look, nice rejection.
Companies left behind when it comes to financing, unable to get financing?
What about
moving on this? That's very nice.
Investors left behind. To me, short squeeze is going to be interesting to watch as we try to get to the opening.
Wait for it to wick up back like that.
On the Standard & Poor's 500 futures. Stay with us on television and radio. It's Bloomberg Surveillance.
Let's see if it's going to pop. See if it's going to fill that wick on the 2 minutes. Or just add. Just sit back and wait. Next candle's now forming. It's finished below the 20. That's the first candle that's finished below since this one here an hour ago.
Today, what are the biggest challenges for General Dynamics, and what are the biggest opportunities?
So I think in any business, the challenges are solving complex problems that come to you. The problems that come to me and my senior leadership team for resolving tend to be highly complex and meddlesome. So your ability to solve those complex
So we've got 2 minutes to go. We'll see if we get this pre-market move.
To the company. And then I think opportunities, you always want to make sure that you've got a creative enough mind and open enough.
We're going to range along a little bit. I'm going to drop back down to this level. You can see where we rejected. You can see that area on the 2 minutes there. Look, just here.
I ask those questions a lot, and in the answers,
if it fills that, it's enough to take profit.
Thinking creatively about opportunities and problems is really important.
And what about the industry generally? Do you think they have big challenges now as the defense budget probably comes down a bit?
So I think that we are all responsible, and we have an obligation to find the latest and best technologies.
Got 1 minute to go. 30 seconds to go. Let's see if there's any pre-market move. That's a nice push down. It's going to break that level this time.
So what is the best investment advice anybody's ever given you?
You don't need to have a good idea every day. So there's times to be patient and there's time to press.
What do you think is the most common?
6 seconds, 5 seconds. Let's see if we get a little trick move by the market.
And the amount of damage that does the average investor is big.
Let's suppose I have an extra $100,000. What would you say that person should do?
And there's the move. Look at that. See? Brilliant.
Or something else like that?
Yeah, I mean,
Let's have a look. See if that moves down.
Buying an index, but buying and holding and just letting it compound is really sensible advice.
Brilliant move. And we just got another $20. There you go. Bang. Took that. In and out. Nice little scalp. Nothing major. One break even. We just took a little bit of money off the table on that one. Nice and easy.
We're wrapping up bank earnings on Wall Street.
Waiting for it to break that level.
Good morning, good morning. Equity futures positive.
Small little scalp. All adds up. That was your move. Again, always a little move half an hour before the open. A push in a certain direction. That kind of, you know, you saw that push down nicely. Look, here we go, breaking. Look, beautiful. Now we're going to get some more sales. Let's have a look.
From New York, coming up.
Let's ride and see.
As Goldman looks a little bit lonely with the trading miss. It's the turn of the smaller banks after the close. We begin with the big issue, the regionals. Up next.
We'll hear much more from some of those smaller mid-sized banks this week.
We're going to see those come out on Thursday.
With all this concern and caution around the regional banking issues,
I don't think we're completely out of the woods yet.
There's a big difference between what's happening with regional banks and what's going to happen with the major national banks.
the bad news is deposit flight.
Regional banks are more at risk than larger banks.
The regional banks will be critical.
They have higher funding costs, that deposits have become more flighty, and they're going to have to contract their loan books.
I'm going to be watching people like First Republic and Synovus and Comerica.
There's still signs of stress under the surface.
That's going to be really interesting to watch.
We really need to probably should be focused mainly on the regional and smaller banks.
Like I say, I'm still looking on the bearish side because of this gap between the 20 and the 200, and we're sat on our trend line on the 5 minute, as you can see. Look, so any kind of buy I think is a bit of a manipulation, but if we get back up to this heavy resistance, the 4 resistance, I'm going to put a load of sells in on that as well anyway. So we'll just let this play and see.
Even the spread products you're seeing also under pressure at a lot of the big banks. It draws questions on just how much of a boost you can get from trading going into this environment. Now remember, Goldman Sachs was trading above book value, Bank of America below book value. Now that trend is starting to reverse, and you're seeing Wall Street come back to the consumer business love. To add to that love, you have Bank of America on a call right now really talking about some of the stabilization in certain businesses that are businesses like deposits, where you're seeing those deposit reductions starting to slow as the rate story becomes a little bit clearer. You also have here Bank of America talking about most of the pain in the held to maturity portfolios really starting to diminish in terms of the pain you're seeing as well. So hopefully that's a bellwether for the industry. But again, we have a host of regional banks ahead of us, starting with Western Alliance after market today. They are just one of a few. We have United Community Banks also reporting today, as well as First Horizon. Remember, it's not just the stocks, John. You have Western Alliance down more than 40% on the year. It's also the bonds. The bonds have sold off pretty dramatically here, and all of these bonds, as well as the CDS, have been massive trades on Wall Street. Now, after this,
there's the push down. Beautiful. Let's watch this candle. Let's see if we get another one for a nice push down. It's broken that trend line now.
Thank you. Goldman down by 3.4%. Bank of America up by more than 2%. As Shanali indicated, some of the regional players reporting after the close. We'll talk about them, led by Western Alliance. First Republic was due to report last Thursday. They'll report earnings next Monday. So put that in the diary, Monday morning, or rather Monday afternoon perhaps for that name. But the regionals over the next week, very much in focus for many reasons. Let's get to Morgan Stanley's Jim Karen. Krishna Mamani of Lafayette College joining us as well. Krishna, first to you. That word idiosyncratic, that word that Shanali just used, are we finding out this banking shock was truly more idiosyncratic than systemic?
I think the shock was systemic in that people had books of bonds and rates rose quite substantially. I think what is idiosyncratic is failure risk, which is if your deposit base was really skewed and your portfolio on the other hand was simply...
It's a nice candle, that. See how we're going to get back to this zone. That's what we're waiting for. We've got a nice... The resistance has now become support. We're below our trend line, so we just need the volume. RSI's dipped into the neutral zone. So this is all looking as a good, nice little setup at the moment. But say things are just moving a little bit slow.
I think this is a really important point,
Waiting for the open.
To what extent the tension of the last month is a substitute for rate hikes? To what extent do you expect there to be a significant tightening of lending standards across regional banks in America? What's the call on that now, Jim?
So the way that we look at this is that, look, clearly there is a tightening of credit conditions that's going on, but we also have to recognize that there's an easing of interest rate conditions that have gone on too. Rates have come down a lot. So there is a balance that we have to think about. I think Krishna said it correctly. It's a cyclical issue at this point for what's happening with the banks. Now, in particular, the smaller banks, I should be very specific about that. The other issue that we have to think about, John, is what's the correlating agent here, right? This was an event. This was an important event that took place in March with the smaller banks. But did something also take place that created
so retest of that 20 moving average?
Top of the markets that created a bigger problem that had contagion. We didn't see that. And I don't think that we should look past that. And I think that's one of the reasons why we've been able to recover.
Intraday,
Yes, there's going to be a
S&P, yes, very flat. Up a little bit. We're looking to try and get that 20 and 200 gap closed up. Like I say, it's just the volume at the moment is low, as you can see. Everyone's waiting for the open. We've got 20 minutes to go. Might be a good time for me to top my coffee up, but we just want to see if we can just grab a few more pips. This is the first level of TP, second level, and then the zone here where we could get a bounce. If it breaks, we're going down lower. That's a big move. You can see it's kind of just in this zone at the moment.
Well, so far from what we're seeing, it seems
it's moving slow,
I'm going to start with the dollar.
Slow and steady.
It has been coming down. If you look at the Bloomberg Dollar Index, or if you look at other dollar indices, you're going to see that the dollar has been coming down in terms of weakness relative to other currencies. It's actually peaked somewhere around the beginning of the fourth quarter of 2022.
Again, if it retests the 20 and bounces down, we can add some more sales in. Same as on here, look. It's moving nice.
Markets are still working well, so we're not really seeing the natural signs of a systemic shock, and typically you see that with a spike in the dollar value, because that's where a lot of long-term liabilities are placed and people need to buy dollars to cover their risk, and we're not really seeing that. So I would say at this point that much of this has been pretty well contained.
Look at the pushback in the equity market from the south side at the moment. Here's 3 quotes for you. Let's start with this from Mike Woolton of Morgan Stanley. This is how we started the week. He said this: with the fastest Fed policy shift in 40 years, we think more negative surprises lie ahead for investors. One that we think is in plain sight is earnings forecasts that remain too optimistic. Emmanuel Julian over at Evercore says this: 23's pause is likely to see a further sell-off, recession, volatility spike before the inevitable new bull market gain. And then this from Marco Kolanovic over at JP Morgan: markets often bottom before the end of a recession, but not before the beginning of one. I want to pick up on that last line there, Krish Mamani. Markets bottom before the end of a recession, not before the beginning of one. There's some pushback as to whether October was truly the low. Krishna, you've come on this program repeatedly over the last several months and said the pain trade here is 4,500 on the S&P. Krishna, is that still the pain trade?
Indeed, and I think we are inching towards that. And one of the reasons is the views that you just articulated from everyone who is a prognosticator at the moment. The issue here is, yes, rates are higher. The risk of a recession is real, but the underlying momentum in the economy is still very, very solid. And I think if you look at housing, and if housing is not crashing at this level, I think it's difficult to say as to how it ends up being in a recession in the near term, and the expectations of the Fed cuts that are embedded in the market, how can they be sustained? So I think for now we are headed towards 4,500. We may be we are in a trading range, but the pain trade probably would be 4,500. The real question is, what is the outlook beyond that in the second half of the year?
Ranging around, so I was just watching this again, not doing anything yet. We're going to get some nice manipulation on the open. Thinking probably a pop to the downside for a pop back up again, or we might get a double top. Nice retest. Whichever, we'll just bang the trades in. When we get to this zone or get here, so we're kind of in this no man's land at the moment, just ranging around, not really doing anything as you'd expect. 20 minutes to go, and then we've got a Fed It's talk tonight really on the API, so there's nothing. And then tomorrow is a pretty lackluster day apart from CPI in the Eurozone. So you've got the inflation news for the Eurozone. That's we'll trade DAX on that news, and obviously the UK as well, but we don't trade the UK one. That's pre-market, but it might move things. But really this week, as always, we're going to look to Thursday, the jobless claims along with the Philadelphia home sales again, and then Friday we wrap the trading week up with some global PMIs. Again, DAX, and then we've got the old 500. They do the composite on, and that's it. So, you know, not as much news around as last week. And the micro, but the macro kind of the world news, obviously there's still a lot to keep an eye on as well. But today's news is fairly done. Really, it's just what the market's going to do. Is it going to react? Are we going to have a drop down into our zone here? Or are we going to have a break or a retest on the 2 minute? And we're still watching the 5. You know, it's good to have these two together. To love the setup. If this RSI goes red, and it hasn't been red for a while, we hit a low here, then we're going back in on some sales. But that's quite, look how, you know, it was a big move up. Once it broke our trend line here, we should have been in, retest, done.
And in my view, I think that they can stay on hold for the rest of the year, and I think the markets are going to be probably mistaken about this, but yet the insurance premium for the market is for the Fed to have to cut rates, and you have to pay for that insurance by buying lower front-end yields, and that's what's priced into the markets. And it's very, very confusing to many people when we say, well, the market's saying this and the Fed's saying that. Yep. No, the Fed is saying that they want to keep you know, inflation in check, and they may have to keep policy rates unchanged for the rest of the year in order to do that.
We're going to continue this conversation. Jim Karen, Christian Mamani sticking with us. Just getting some Fed speak from Jim Bullard, the St. Louis Fed president, speaking to Reuters. Here's one headline for you. He favors more rate hikes, not one, which is implied by the dot plot in the latest SEP from the Federal Reserve, the summary of economic projections, but more rate hikes. We'll talk about that in just a moment. Equities stay positive, up 0.4%, with some movers going into the opening bell. Here's Abby.
Hey, John. Well, let's take a quick review of the banks this morning. The tale of two cities, or stories, bank stories here between Goldman Sachs and Bank of America. Goldman Sachs is down after they, of course, beat equities, missed fixed income. Their head count down and below estimates. Not as impressive, a high bar expectation, so that stock down. Bank of America up 2.2%. They beat estimates on strength from fixed income. Bank of New York, to throw that one into the mix, they beat on deposits. Earnings was in line. Sales missed. The stock is lower. Taking a look at a couple other earnings movers. J&J, their first quarter sales beat from the consumer unit and COVID. They raised the outlook. The stock is up modestly. And then two industrials. We have Lockheed Martin higher, up 1.6%. They beat and reaffirmed the view. JB Hunt, on the other hand, down about 2%. They missed, and they are also saying that there are challenging demand trends.
Abby, thanks for that. You brought our equity market then again, up 0.4% on the S&P 500, about 17 minutes away from the opening bell. Up next, China's economic growth picking up pace.
Look at that 4.5% GDP number, okay? Pre-COVID, we have never seen a GDP number as low as 4.5%.
The pace of progress gets faster and faster. That's why we don't just invest in the companies that are changing the world today, but are also shaping the future. The Scottish Mortgage Investment Trust. Invest.
Cool. Right, we're just going to close some trades there. Yes, there we go, done. So I got in on that candle there once it pushed down past this low here, and we just got out just here, look, as we're coming to our next area of support, and we're getting near the open. But what did we get there? We got another $30 or so. 3, 6, 9, 12, 15, 18, 26. Yeah, $20, $25 or so. Again, nice and steady. Small account. Don't need to do any crazy risks.
Did art conservation help you in any way to be a better investor? And should a lot of good investors learn how to be an art conservator?
Just shows you just got to wait.
I think in conservation and art history and liberal arts.
Yeah, it's come down more, but now I want to wait for this to hit our zone here, look.
And also, I think I mentioned one of the things is
Beautiful. We'll see, once it breaks that 20, retest, down, retest, down. So smooth, and you know, it's been wide. The 20 and the 200 have been wide for such a long time, and that affects it on the 5. Look, we broke our trend line, it retested, drop. So, and now the RSI is red, exactly where I said I needed it to be to take a sell. So you could have just loaded up sells all the way from here if you wanted to, and have your stop loss above here and waited all this. Me, I like to go in multiple times, and you know, but that's took me over my daily goal. I'm actually $60 over my daily goal today because we had such a good morning with DAX. So everything is now a bonus. So I could lower my lot sizes. I'll wait and see. What, 10 minutes to the open, the final trades of the day. Look at that. Look how accurate that is. This is what I love. Look at that. There's the zone I drew, and look what we've got. Support on our indicator forming and a push back up again. Perfect. Look at that. I mean, this is how good the system is if you're using our system that you get as part of the group. See? Whereas I drew it manually, you didn't have to. You could have visualised that, and there's your pullback. And no doubt some people would have jumped in for a buy on that. That's a nice.
Restaurant hospitality is that revenge spending that's coming through just to get to 5%, 5.5% even. It could be consumer spending, it could be a bit more infrastructure.
So we'll keep that zoomed in as we get to near the open. 10 minutes to go. Our last trades, we should be hopefully in and out in 5 minutes, and then we're done. Like I say, we'll be back doing another live stream tomorrow. I'll try to keep these sweet and short, so you know you haven't got to hang around the charts. You just need to get in before the opens, do a bit of analysis, get out 30 minutes maximum after the opens. I did about I did half an hour today, I think 30 minutes on the London Open, got what we needed to get, and we've done this now on the news of the homes, and then we're going to trade the open, and that's it, done. If you can continue scalping, you can do, but like I said, I don't like to overstay the welcome in the markets, not when you've got your profit and you don't want to be giving it back. China's had an impact. Look at that, beautiful. That's why I'm glad I got out. Yeah, I could have took another few dollars more, but like I say, as soon as I see that green, bang, I'm having it. I'm not giving any back. Now I would have been back to break even. So, you know, I hate people saying hold longer. Oh, are you? You know, just take the money, because you're dealing on a 2 minute and a 5 minute time frame. Specialist scalping. It's not 15 minutes. It's not 1 hour. It's a totally different way, totally different mentality.
And what I've heard a lot of is this year good, better off the back of reopening, but then the challenges click in, and next year gets harder, much harder, and maybe we need to start to consider 3 handles on GDP. How do you think about that one, Ender?
I think it's a fair comment, John. Let's not forget also the base effects. We're looking at figures compared to a year ago when the economy was in the funk with the Shanghai lockdown. So there is some of that. Next year we'll be talking again about demographics, no doubt. Structural challenges. The property market still hasn't rebounded. There's plenty of headwinds in the pipeline for China's economy. And of course, let's not forget the whole geopolitics and decoupling debate as well.
And the current on the latest down in Washington on China's challenges over the long term, in the near term, that data is looking better than good. I want to return back to the Fed speak. Ton of Fed speak this week. Ends going into the weekend. That's the quiet period before the May Federal Reserve decision. I can't believe that one's come around so quickly. This from Jim Bullock, the St. Louis Fed president, speaking to Reuters. A couple of quotes for you. Bear with me as I read through these lines. Wall Street's very engaged in the idea that there's going to be a recession in 6 months or something, but that isn't really the way you would read an expansion like this. He goes on to say, the labour market just seems very, very strong, and the conventional wisdom is that if you have a strong labour market, that feeds into strong consumption, and that's a big chunk of the economy. It doesn't seem like the moment to be predicting that you have a recession in the second half of 2023. Jim Bullard of the St. Louis Fed favouring more rate hikes still ahead. Christian Mamani, I want to come to you on that. Back in March, we go to March 8th, and I think that's an important date for a lot of people who follow this market.
10 minutes to go, team. Look at that pullback. See? Beautiful. Came out of my zone. Support. Back up to where we were. So this is why we're going to retest the 200 on the open, and we're going to get a flush up. or is it going to just flush straight down? We don't know. We just go with the move, simple as. And if you miss the move, you wait for the pullback. By the 5 minute, you see we've broken our trend line. Here's the zone. We're going to come back down to it and retest it. Let's just see if the forex sign pops red again, comes out the zone, then we're looking at coming down. So back to our baseline. Our baseline, if you put a line, our baseline on the 5 minutes at the moment is here, look. And that is where I said the TP might be. Look at that, see? And that's our baseline based on the 5 minutes. So you can see on the 5 minute where you need to be getting out of trade if you want to hold for that long on the 2 minute. If that baseline moves higher, guess what? You move your line higher. You know, you don't just leave it there, you move it with it. We do just above it, about there at the moment. There you go. So this is the furthest I would ever hold based on my 5 minute analysis. If it breaks the baseline, then we can look at the 500. The 200, sorry, moving average. There you go. And there's your next line. If it breaks that, then we're looking at our next area down here. So it just goes on and on. It's like climbing a ladder up and down.
All the inflation going still in the wrong direction. We're not seeing the disinflation that the Fed is hoping for. So to me, the biggest worry for the Fed, what keeps them up at night, is that inflation becomes unanchored.
Right, so what we're going to do, my coffee's gone cold. I'm just going to pop it in the microwave. So I'll be literally a couple of minutes, a toilet break, and I'll be back for the open.
And if that happens, then the Fed may have to re-enter the markets and start hiking again from a higher level. They don't want to do that. That would be very devastating for asset prices. So I think if they have a choice to cut rates in the second half of this year or keep them on hold for longer, I think they're going to do that. So I think there is a mispricing in the bond market with that respect.
I just want to pick up on that range of outcomes, those range of outcomes, Krishna, and give you a decision to make ultimately. Just your base case right now. Each and every outcome is going to have a different probability, obviously. Mohammed Al-Arian wrote in the last week or so, and he offered these three ranges, and I think they're important to look at. One is that the Fed pauses in May, does what it's implying it will do in the dot plot, and stops right there. That's your terminal rate, just north of 5%. Now, you can pause and then start cutting, or you can pause and then hold through to year end, or you can pause and start hiking again. Krishna, of the three right now, what's your base case?
Pause. That is, they probably get to somewhere 5.25, 5.5, maybe if June comes back into play because of some data point, but then stay there for the rest of the year and probably even in early 2024 would be my best guess.
Is that a world in which equities do well?
No, so I think that's the point I was trying to make earlier, which is equities, given where we are and lack of volatility, may get to 4,500. But it's when we start repricing the bond market and the expectation of Fed cuts, that's when equities probably go down, not because of recession, it's just that there is no recession.
And that's the tension for the back half of this year. And Jim, I think that's what you're saying as well when you talk about the hard data being on a collision course with what's developing. Is that right, Jim?
Yeah, that's exactly right. So essentially, the hard data right now is going to slow. We are going to see some slowdown, but the reality is that if we look at equities, the earnings trough is supposed to be in the first quarter and the second quarter of this year. After that, in the second half of this year, we're going to start to see some marginal improvement. Earnings forecasts are negative for 2023, but then they rebound in 2024. So the issue for the equity markets is, do you look through this air pocket right now in the earnings year-over-year cycle? And I think the equity markets are saying that we do, unless we see a hard landing. So if we don't get that hard landing, don't get that recession, the path of least resistance may be to percolate to higher equity prices today.
Hey, Jim, wonderful to get your view. Jim Caron there, Krishna Mamani, to the two of you, thank you. Coming up on this programme, the morning calls and later, big bank earnings continue to roll in. We'll lift the lid on those numbers with Stephen Bigger of Argus, plus the earnings outlook from Alpine's Sarah Hunt. That conversation up shortly.
you're so intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. You know, I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation, those are things that, you know, peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it's causing quite a lot of anxiety, which means, you know, for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it is, you know, it's very different, and it's not something people have had to operate in for a long time.
About 4 or 5 minutes away from the opening bell, equity futures positive here by 0.4% on the S&P. That's the price action. Let's get you some morning calls. Citi upgrading Chubb to buy, 229 price target, seeing multiple paths for growth and a strengthening balance sheet. KeyBank downgrading first.
Right, we're back. Topped our coffee up just in time. 4 minutes to go to the open. Final trades of the day. Look what we got. Price has come back, retested our support zone. We're getting ready. Right, let's take the line off the chart. Remember, go with the move, but wait for the move. Make sure the move actually happens. So good luck, everybody. It's time to rock and roll. Final trades of the day for me. Then I can hit the gym, relax, do a bit of back testing tonight, and then we're back again tomorrow. That's how it works. So we've got 2 minutes to go. Let's zoom in on this 2 minute. So we're below our trend line, we're below the 20. We're in the, really this is like a no man's land, but I like it when it's below the 20. It's below the trend line, the momentum is to the downside. Are we going to manipulation to the upside? We take sells and then we drop. Here's our TPs for buys and sells. As I say, we zone these out. We know where we're going to go. We're loaded into our broker. Yep, we're all on. And we've got 50 seconds, everybody.
How much we're going to pay them and how much like the consumer is paying them. So you can decide whether they take an order or whether they refuse it. And that's the kind of flexibility.
Get some pips. Bag those pips. 30 seconds to go. Look at that nice push up. Bit of manipulation. Is that going to trick you? Oh, that's nice. Nice and warm coffee. Right. This should be a good one. Look at that push up. Oh, how many people are buying right now to get caught out maybe? Let's see, it's wick down. Right, hovering. Good luck, every 15 seconds. Let's see what green we can get. 5, 4, 3, here we go. Oh, beautiful gap. It's nicely gapped up and rather dropped down. Look at that. Beautiful. Look at that drop. Let's see it wick back up again.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so
Let's watch it fill those wicks. That's a nice little move. It's going to break that zone. Going to go back into our zone there. Looks like it is. And we're out. $60. $60. We're done. $60. We've got that. Now he's going to break the zone. First block of trading done. And we're going to go lower. Look at the 5. Look at the 2. That's looking tasty. Got a nice little move there. Yeah, we've got another $20. Another $20. Perfect. Ooh, I love that. Love that little move. Literally took 29 seconds. I told you, wait for that move. Look at that move. Beautiful. The chart is perfecto. Now we're into our zone. Let's have a look. And we're going to get a retest. We're on our base. I told you where the TP is. Look, it's hit the TP. It's hit our line. Now we're going to pull up. Is it going to refill the wick? Bounced off our 200 moving average. Look. I like that. A Bloomberg. S&P positive. Yeah, so positive. That's a positive candle. Look at it. Brilliant. You got to love Bloomberg. There we go on the bigger chart. You can see that drop. If it breaks the 200, look at that. Oh, what the drop. We're going down to our zone there. Look, it's going to retest that 200.
Misses the mark and down about 17% on a year-over-year basis, whereas
Perfect.
Bank of America really blows it out of the water. Let's take a closer look at Goldman Sachs, though, a broader look, because their equity business actually
Told you the 200 and 500 are about to come down.
A beat as well. Sales were a bit of a miss. What we do have, though, is a higher bar proving challenging, because this company has really out-delivered.
Let's see if this wicks down anymore.
Point around this, it is basically flat over the last year, the stock, whereas Bank of America is down about 20% over the last year. They also did show that headcount reduction, probably a little bit more aggressive than what people had been expecting. Bringing Bank of America into the story, they really beat right across the board. Sales, earnings, FIC trading. That FIC
Again, if it comes back up to this level, we'll take some more sales at this resistance level here. We're just sat waiting now.
If we take a closer look at the FIC miss, because that really seems to be what's weighing. Last year, for their first quarter, they put up $4.7 billion.
Got 153 on the 5-minute candle to break our baseline.
$3.9 billion, again, a 17% decline thereabouts. So the stock is down. But again, remember, Bank of America underperforming over the last year. Goldman Sachs.
So on that 200.
So a little bit of an evening here.
Also worth pointing out.
What a candle. Great. That candle was just the perfect entry. Should have gotten halfway on that.
Over the last couple of days. Decent rally put together on Friday after the JP Morgan numbers, up by a little more.
We're below the 200. We're going to finish below the 20. We finish below the 200.
By 6 or 7/10 of 1%.
Let's see, we're just holding.
By 3.5%. Abby, thanks for that. Working through some of the big names this morning. Morgan Stanley, the final big name to report tomorrow morning. Looking forward to that before the opening bell. I want to turn to the smaller banks just briefly. BNY Mellon's first quarter deposits topped analyst
Beautiful
estimates.
push
The
down.
CEO said this, time and time again, BNY Mellon has been a port in the storm for our clients in times of market turmoil. Sonali Basak wraps it all up for us. Hey, Sonali.
John, it's amazing how many banks we're looking at this season. You have Bank of New York Mellon really showing you a different story from State Street, but we have a host of regional banks.
Lovely rejection on that candle there. Look at that.
There are very big differences in what is
Pushing again.
deposit outflows. But I've got to say, if you look at the banks that have reported so far,
Trying to break that 200.
deposit story, it's a profitability story, and the ability of these banks to lend. Just take a look at what happened at M&T yesterday, for example. The deposits missed slightly on estimates, but their net interest income was.
Let's see if we get any more trades or not. So I want to see if it's going to break below that 200. The 200 is the same as our baseline, as you can see. Look, both there together.
A lot of these differentials are regional. Western Alliance are expected to report after the market today. Phoenix-based Western Alliance, then First Republic, and we've talked about this a lot. We're not out of the clear for this system here until we hear from First Republic early next week. And so you see U.S. Bancorp, PNC Financials, the larger of the regionals, really holding steady on the deposit.
It goes higher, which will reject down.
Line with what Bank of America is saying here.
Let's see if it gets into that blue zone. Yes.
But it's starting to ease a little bit.
It's going to wick back down again.
How sticky are deposits overall?
Oh, look at it. It's moving beautiful. Come on, break that 200.
So, does the consumer story
That rejection.
to these banks that have been so poorly beaten in the stock market up to this point this year?
Hey, Sonali, thank you. The regional banking story there, just a bit softer by 5 or 6/10 of 1%. Sonali will, of course, drop by tomorrow morning to work through some of those regional bank earnings we get this afternoon, and Morgan Stanley coming up before the opening bout tomorrow too. Back with us now, I'm pleased to say, Stephen Bigger of Argus Research joins us to talk about some of these names. Stephen, great to catch up with you, sir, as always. I was going through some of your calls before the program. Bank of America, buy. JP Morgan, buy. Morgan Stanley, Citi, Wells, buy. Do you like what you've been hearing?
That rejection, beautiful wick. We're still watching on the 2 minute. We're still watching.
Yeah, so far so good. I think there's been a 100% beat rate. If you take out some of the asset custody banks like State Street yesterday, and yeah, these have been pretty good results. I mean, I think we've banks have demonstrated the power of diversification basically in the large banks that you mentioned. Some of the smaller regional, even mid-sized regional, I think are going to have
sat on that zone low, sat on our baseline, sat on that support. It's trying to break it.
The banks are facing right now with some outflows is going to be watched pretty closely here. But yeah, the large banks, I think the trading's still doing well. Investment banking has been weak as expected. Net interest income probably the peak for the year this quarter though. Facing some deposit, some margin pressures as the year goes by.
One name underperforming this morning, it is Goldman Sachs. Now, Stephen, that's one name I didn't mention next to the word buy. From you say hold.
Still sat waiting, still want to see. 2 minutes 58 left on the candle.
Well, yes, it does. I think our whole recommendation is that Goldman is still, as old as the bank is, I hesitate to say, still trying to figure themselves out. They're an investment bank and trying to tack on a consumer.
Lovely rejections all the time of this from our zone. It's trying to break here, like you can see.
Up until 6 months ago.
Like I say, if we're going up higher, we're taking more sells here and here as it rejects again. But we're just going to wait and see what this candle does. Popping down. Going to retest that 200. This is what I want to see.
60% of their revenues in terms of trading and investment banking, whereas your larger global peers wake up with probably 80% of the revenues kind of already in the bag in terms of net interest income and other transaction banking. So it's a work in progress with Goldman. The sheer volatility, I'm afraid, results in a perennially lower PE and other valuation multiples, and I think that's the thing that they have to overcome.
Getting ready.
More consistent on those return on equity targets in order to.
He's going to break below. Look at that. Look at it hanging. Just got to wait. 7 minutes. Wait. Just waiting to take my final trades.
By 6 or 0.7%, just turning negative by almost 1% just moments ago. Stephen, I just wonder, you don't
yeah, because you haven't got a clue. They don't know.
When we get to the end of the quarter, and you've heard from
this candle's got 1 minute 19.
You expect to write that the big banks crushed it, or the smaller banks got crushed?
Can't wait. You want to make a move either higher so we can sell or lower so we can sell. Come on.
In the industry here, deposit flows still favoring the large banks.
Oh, look at that move. There we go. Right, let's get ready. Come on, push up to that blue zone. Come on.
Situation. They either want
push to the blue, push to the blue.
Deposits and pay up for higher rates or not. And I think to date they've not. And the reason is that deposits are still above where they were pre-pandemic. The industry had a flood of deposits during the pandemic. And I think they have room to wear those deposits off a little bit before they start to worry about having to either up rates to attract more deposits or to have to borrow funds, which they also can do in the open market. But yeah, the big banks I think are the place to be, as well as I would add though the super regionals, the Truist Financial, PNC, USB. These are all banks very well positioned, great, national.
It's reached that zone,
great deposit bases, and
the blue zone. Let's see if we can get. Come on, if it goes higher every time, keep selling. Come on.
Butter is really lending, and you've got a fair amount of commercial real estate mixed in there. I think you're in for a much tougher year.
It's going to be a tough time. Maybe we see that in the numbers a little bit later on this afternoon. Stephen, thanks for that. As always, Stephen Bigger there on a busy morning for him, with some of the big banks reporting this morning, and then a little bit later on this afternoon.
If it pushes into that red, if not, we'll take profit.
Market's talked about that a few times. Your broader equity market about 9 minutes into the session, positive a third of 1% on the NASDAQ, up almost a half of 1%. Sarah Hunt of Alpine, looking for signs of an earnings slowdown. She writes this: recent estimates do not seem to be showing an anticipated slowdown usually associated with a recession.
Looking how close that 20 is getting to the
Question of this earnings season
200 now.
with very good numbers.
Just waiting, just holding here.
Joined us right now. Now, Sarah, I guess
1 minute left on the 2 minute candle.
whether you think there will be a recession or not. Now, where'd you come down on that?
I think it's really hard to tell. I think we're still all working through data. I think you just saw some slowdown in housing data. I don't disagree that even though we've been arguing about when these long and variable lags
See if that pushes into the blue zone. Yes, right. A few more. Let's get some more positions in there. Let's watch and see.
It's hard to believe that credit doesn't contract or that people don't make as much investment when you have to pay 5 or 6%.
We're going to retest that 20.
2% or 3%. So I just don't see we really worked through that yet, and I think that the market seems to be anticipating cut by the Fed before we're even done with this tightening cycle, and I think that the Fed will probably stay higher longer as long as there isn't underlying problems in the economy because of the higher rates.
What do you make of these comments from the St. Louis Fed president to Reuters in the last 20 minutes or so? The labour market just seems very, very strong. The conventional wisdom is that if you have a strong labour market, that feeds into strong consumption, and that's a big chunk of the economy. It doesn't seem like at the moment we should be predicting that you have a recession in the second half of 2023. Is that something that resonates with you, Sarah? Something you'd push back on?
Still waiting.
Well, I think, this has been the biggest anticipated recession in quite some time. So people have been looking for this. And I don't disagree that the labor market has held up very well, but it's hard to figure out if it's held up really well because of the previous payments that people
touching that
received
20.
during the pandemic, and or the fact that people had
Let's,
to rush
I'm
to
going to
staff to
reject
get
off
things
it. Yes,
together.
beautiful.
And wages don't seem to be accelerating as much as people had originally anticipated that they would, and you still have a lot of people out of the
Forming a
labor
nice
market.
W pattern. Let's try and trade that center leg. That's what we'll do.
Actually going to go. I think you've got a lot of questions about where margins are going to go, and that's a little bit about labor pricing. I don't know when this happens, but clearly like the extension on timing has come through here, because we were earlier last year, people were anticipating a slowdown in the first half. We always thought it would be the second half, and now it's hard to figure out whether or not that's being pushed out even further, but I think it is coming, and I think that that's
We're going to end there, come on.
sort of anticipating.
We took some trades.
Is the juice worth the squeeze?
Took that nice little rejection out of there. Yes, brilliant. Woohoo, that was a nice little one. What did we get there? We got about another $50 there. Brilliant. Look at that, it's going to post those results. Took the red candle.
I think from where we are now, I have to agree with him. I think it's very difficult to go chasing it now. I think that's, we came into this year, people were very much positioned for a slowdown. That didn't happen. And
Doesn't matter that it goes back up now. I took that initial, there's always that initial rejection. Always the initial rejection. It's still trying to reject now. Look at it going again. Look, perfect. Like I say, we're $149 over our target for the day, so this is pretty good. I think we're going to end it at that.
But I do wonder where we are now versus where we should or could be in the next few months.
Current REIT is already, we're already $100 over for 2 days average. So yeah, very good. That's how you do it, guys. That's it. It's not complicated. Get those trades in. It's rejecting now. Look at that. See, if you want to go again for a sell, look at that. Beautiful. Rejecting out the zone. Rejecting off the 20. Is going to come back down and retest that. And you can see the TP on the 5 minutes there, look, along with the 2. That's the area. It retested the 200. False break. Back up. Here's your next supply and demand zone. But these are nice little scalps you could be jumping in on if you wanted to. Me, like I say, once I've hit my target, I'm done. But that's a beautiful setup. I love this combination of these two together. They're working really well. Nice wins.
The underlying commodity, crude right now, still just about holding into the 80s, $80 and about 50 cents on WTI, softer by about 0.5% on the session. If you're looking at Brent, 84.36, we're negative about 0.5% there. Just want to check in on the bank earnings for you, or rather the price action on the back of the bank earnings. Bank of America, just about unchanged on BofA. BofA just about unchanged, down 0.1% after opening up positively a little bit early this morning. Goldman still trading lower by 2.65%. The broader market up by a third of 1%. Coming up on this program, Apple teaming up with Goldman to debut a high yield.
Okay, so want to wait now and see what the next move is. Remember, take trades always close to the 20, close to the 200. That's the best way. It's when it's in between it's more dangerous. So wait for this, see if we're going to have a break back now. It's going to be a buy. Is it to the next level here? The levels are set. You just got to wait. So there we are, guys, but thank you for joining me. It's been a pleasure. It's been a nice just over about 90-minute stream there, and we're done for the day. So that's it. We're off to the gym. We're going to relax. We'll do a bit of back testing later, some chats with the guys in the group. And like I say, if you want to learn how to scalp like this, use the system we're using, then drop me a message. It's all on the YouTube channel, or you can go to the website www.mohawkforex.com. And we will be back in the morning to trade the London Open, and should be back for another live stream. So again, thanks for joining, and hope you enjoyed that, and we'll see you on the next one. Take care all.